Hello, I am Steven Spencer, a partner at SMB Capital, proprietary trading firm in New York City, where we trade stocks, futures, and options, and also try to make some educational videos to help new and developing traders. Today's video, I got a question on Twitter about trade management, so I'm going to read the question to you. Hey Steve, I was wondering if you might give me some advice or share your insights. I was long 2000 ABIO this morning. I sold out of it very quickly because I was worried that the buyer might just disappear, which happens sometimes in small caps. This would have been a really good trade as it peaked at $9 20 minutes later. Do you have any suggestions how I may manage trades like this better in the future? Thank you, Scott from Connecticut. So this is really a question about risk management, having a trading plan. If you're interested, stick around. Before we answer Scott's question today, I want to remind you we have a 2-hour free workshop at tradingworkshop.com, or click on the link above. 2 hours. In that 2-hour workshop, you will learn stock selection, where I spend 30 minutes. You will learn 3 low-risk, high-reward setups that are used on our trading desk in New York City. It's free. It's good. Check it out. Okay, on to Scott's question. So Scott had a question about this stock, ABIO. It was from last week, and he got long 2,000 shares. And he got out of this stock very quickly before the trade started to work. In trading parlance, we call this being shaken out. So the question is, the problem that Scott's dealing with is being shaken out. Are there things that he can do to avoid being shaken out in these positions that he's taking based on his trading ideas? And so I grabbed the chart from the day and the time that he actually got into the trade, and you can see that at 10 o'clock some volume came into the stock. Stock moved very strongly to the upside above $6, spent about 10 or 15 minutes consolidating, and Scott, I've circled there or pointed to the bar where Scott got long. So from just a pure technical standpoint, he identified a stock that was in play, surging volume. He actually waited for confirmation that buyers had stepped up to higher prices, because he bought when actually there was a large green bar kicking out the morning's high. You can see I put an arrow down to the volume showing there was a surge in volume. So these were all good things. And when I actually asked him some follow-up questions for his original question, this is the feedback that he had given me about the trade. I'd asked him, why he was long, was there a catalyst, what was the setup, did he have targets, did he have stops? I wanted to get a better feel for what type of trade it was and whether he had a detailed trading plan, so I could give him some good feedback that would potentially be helpful to him and to those of you watching this video. So here was his response. So he bought the 2,000 shares. He gives the precise time and the price. And so I was able to actually look at the chart and kind of reverse engineer and see that it made sense. He basically, what he had here was a stock that moved up on volume and breaking news, and he waited for confirmation, meaning it stayed at higher prices, and he bought it when it took out the morning high. So it's a momentum trade. And in that momentum trade, he should have very detailed ideas of what his profit targets are, what his stop is going to be for a loss, what his trailing stop would be if the trade is working for him and maybe starting to not work. And in his response, these were his answers. Why did he buy? There was a high volume breakout at 10 a.m., putting in the stock in play. My purchase was timed with a 2 standard deviation volume breakout at 10:13. So I guess what he means there is he was looking at the prior bars of volume and noticing that the surge in volume was 2 standard deviations, which is just a statistics standpoint. 2 standard deviations would be something very unusual. So it seems like he's got a pretty firm grasp on what he's looking for to get involved in a setup and what the trigger will be for him to get long. I think where things start to fall apart a little bit are when he well, what he says about his target. He says, my target was to sell into a strong rally that was losing momentum, but no specific price target. So as I said, this is a momentum trade, and on its face, there's nothing wrong with having a target as the stock's moving as momentum, but he doesn't really define it at all. Before we get into the definition, here's another chart that I pulled up just so we can look at more detail at how the trade developed. So you can see I highlighted where he got in, which is based on the timestamp that he gave me. I highlighted that very tight, or that consolidation after he got in for the next, we're looking at a 1 minute chart. So this is a 1 minute chart? Yes. So we're looking at a 1 minute chart. So it consolidated for about 7 or 8 minutes before it broke to the upside again. I'm showing you where he actually exited. You can see a couple minutes after he got in. And I'm also highlighting for you where the buyer stepped up to $7.20. And his stop was actually really, he had a pretty good stop. He had a stop at $7.15. So his entry was well-defined. His stop was well-defined. It turned out that his stop was actually just below where the buyers stepped up to after he got in. But he just didn't have a target. He didn't think about what the type of move he was looking for, what does momentum slowing look like. And I think if he had what Mike coined a reason to sell, Mike Bellafiore, the other partner at SMB, a reason to sell, if that was part of his trading plan, it failed. You know, he had a reason to sell if he was losing money below $7.15. But he didn't really define a reason to sell if the trade was working. If he did that, if he kind of visualized, you know, whether it would be a measured move or a certain percentage of an ATR, and we'll get into those things, then I think it would have been a little bit easier for him to stick with a trade that was actually working. Meaning working was it wasn't going against him and he didn't hit his stop. So here are some things to think about for trade management. What type of trade this is? It's a momentum trade. Trading plan, entry, price trigger, stop. Your stop's going to be at a support or resistance level depending on it's a short or long trade. He had those things, but he had not developed targets. He had no idea on targets. It was just if it had some momentum and slowed, I was going to get out. If he had a little bit more detail, if he thought about what does that look like, the loss of momentum, it would have been, I think, a lot easier to stick with the trade. But here are some things when we set up targets. ATR. If the stock has an ATR of $1, you know, having an initial target of a half of an ATR, 50-cent up move to sell half the position, makes it easier to manage the trade. Measured move. What did it do initially? If we look at the first chart, when it moved higher, it moved up from, initially the volume came in at 5.5. It went up to about $7 was the high. So it went up about $1.50, and it was consolidating at $7 there. If his measured move was to $8.50, another $1.50 move, he would have been pretty ready to exit the trade, you know, pretty close to the high where it got to that morning, which was 9, but you can see it actually slowed down in that 8.5, 9 area. That's another way to kind of potentially set targets, measured moves. The first wave up in the stock was X, consolidates, I'm going to look for another X. Quite often intraday, you'll see 3 waves in stocks, whether they're long trades or short trades. What else do we look for in setting targets? Momentum. The way to judge momentum is when a stock is trending higher over a period of time, over a period of 10 or 15 minutes, you know, what do those bars look like? Of course, in the case of this particular stock, we can see when he got in, it had already started to move sideways, so we didn't see any momentum. And I think this was part of the reason. Not only did he not have a detailed trading plan in terms of targets and what momentum he needed to see, which kind of got him out of the trade a couple of minutes after he got in, but also the stock actually was moving sideways when he got in. It broke out above the morning high, where we can see right there in the chart, that's his entry. And then almost immediately, it went a little bit higher when he got in, but then it starts moving sideways for 1, 2, 3, 4, 5 bars there. And the momentum really doesn't start again until it takes out the high. And then you can see a nice trend there from, let's call it 7.5 all the way up to 820. And in that case, the momentum slowing was at 820, it started to move sideways again and pull back. That would have been a perfectly good spot if his plan was after the uptrend momentum slowed to exit, and probably on the drop of $8.10 or $8 or something like that. Now, here's the thing. In Scott's response to me after his initial direct message on Twitter, I tried to kind of get out more details in terms of the plan, and he did say he was going to get out when the momentum slowed. So if he had defined that as once I get in, if the stock does not make a new high within 5 minutes, that would have been a perfectly legitimate reason for him to exit in that consolidation there. Part of a momentum trade is it needs to move higher in a certain amount of time. But he never defined it. He never said, I'm going to break on the new high, I'm going to get in on the new high, and it needs to move higher in X number of minutes, or I will exit this trade. And in fact, if he did define how long it would have to take to start trending up again, we can just look at the prior consolidation before he got in below $7, and you can see it was about 1, 2, 3, 4, 5, about 6 bars before it started to move up until that second green bar where he entered. And so it was, if he was going to kind of set how long it should take for the next up move, 1, 2, 3, 4, 5, 6, 7, it took 7 on the 8th bar, it moved up again. So it was a pretty similar type of consolidation there. So it was nothing out of the ordinary. And you notice I also drew a trend line. Another thing people might look at is if it's trending higher from the open, they'll say it's consolidating. And if it consolidates and breaks to the downside and breaks the trend, that's another reason to exit. And so you can come up with these different ways based on patterns you see in a particular stock and a particular type of setup. But you need to have this reason to sell in advance. And that's going to keep you in the trade. And I hope that helps, Scott. And I hope for those of you watching, it helped as well.